When we talk about setting up your AR report, that's your accounts receivables. We're referring to you listing all of your clients. I think we've shown an example before so that you have columns that indicate the county and city where you've done the closing or the title research. And then you've got the clients, the borrower's name and address, the type of search that you've done or the type of closing. Yeah, the client that ordered it from you, that's the company that ordered it from you, the fee that's being charged, the date that the services were rendered, or either the date that the order was sent over to you, and then the date that the invoice was paid for that particular account. It's called accounts receivables. It's an AR report, and it's vital to everything that you do. There's no ifs, ands, or buts about it. When you receive a new client or a new order, you need to make sure that you enter that in your AR report. Well, today I want to show you something that has to do with your general ledger. I want to show you a video, and I should have loaded this before we got started, that has to do with your general ledger. Now, Thea, you and a few other people, Rachel, 3 or 4 other people, you guys are taking Easy Corporate Comprehensive Curriculum for New Business Owners in conjunction with the abstracting made simple. You guys are taking both of those. And so in taking both of those, it's quite a bit of information that you have to glean. And I'm aware of that. So I try to be as detailed as possible when I'm explaining everything to you, so that, and so it may seem like, well, she's already told us this, but I'm trying to make sure that you understand the importance. This is just not information to know. This is information that you're going to need to apply. Okay. Rachel and a few of others are limited franchisees. Thea, you are an individual that's a nonprofit, but you also purchase tax certificates. Okay, so you have to know how to research the title when you obtain those tax certificates from the county, so you can see the title history of the property, and you won't have to always pay somebody else to do it. So you're taking Easy Corporate Comprehensive Curriculum for New Business Owners, as well as title abstracting made simple. And Rachel, you're taking the same too, to build your corporation, to be able to not just build it, but to sustain it and be able to prosper in it in a variation of ways. So you guys, again, have to glean a lot of information. I'm going to share with you this video that has to do with your general ledger, and then we're going to pop right on into abstracting. So what did we, and I need to say this to you, because I'm on a different platform, we won't have the summary notes. We're not going to have the summary notes this time. So I want you to pay close attention, because we won't have the summary notes to accompany the video, because I'm in a different platform. I'm not in Zoom. I'm in StreamYard. Okay. All right. So let's pay close attention as to what's being stated, so you'll know your next moves. So I've already talked about the AR reports. That's the accounts receivable report that you have to keep updated. It's vital that you do that for several reasons. One, because it gives an idea, give you an idea, and everybody an idea of your production. That's the first thing. Secondly, if you need to factor your invoices for the sake of being able to keep a consistent flow of revenue in your account, they're going to need your accounts receivables. And lastly, your accounts receivables gives you an idea of the general ebb and flow of your business, so you understand your own seasons and seasons where things are off, and you know how to add other products to your baseline to offset any plummets in your production. Okay, so but the AR that's non-negotiable. Every time you get a new order or a new order in, or a new closing order, that needs to go on your AR report. Take a look at this video explaining how to set up the general ledger and the importance of the general ledger.
Chapter 3. Managing Business Finances Effectively. Today I'm giving you a fast, actionable checklist to set up a clean general ledger, keep pristine records, and separate business from personal money like a pro. If I can't trust my numbers, I can't trust my decisions. Let's fix that in 5 moves. Move 1. Basics of record keeping. Record every transaction. Sales, purchases, receipts, payments. No exceptions. Maintain ledgers for assets, liabilities, equity, revenue, and expenses. Assets, liabilities, equity, revenue, expenses. Prepare 3 core statements. Balance sheet, income statement, cash flow statement. Ensure compliance. Align with your local reporting rules and deadlines. Why it matters: accurate records build trust, make taxes painless, and reveal your company's true health. Move 2. Set up your general ledger. Create ledger accounts. Start with cash, accounts receivable, inventory, accounts payable, loans, owner's equity, retained earnings, sales, service income, rent, utilities, salaries. Format columns: date, description, debit, credit, running balance. Date, description, debit, credit, running balance. Build a chart of accounts with clear names and numbers. Keep it simple. Keep it consistent. Move 3. Record and post. Journal entries first. Every transaction hits at least 2 accounts: debits and credits, balancing assets, liabilities, plus equity. Post entries to the ledger daily or weekly. Don't let backlog pile up. Move 4. Reconcile and adjust. Trial balance. Verify total debits equal total credits. If they don't, find the gap. Adjusting entries, accruals, deferrals, depreciation, corrections. Then generate statements. Balance sheet, snapshot of what you own and owe. Income statement, profit or loss for the period. Cash flow, where the money actually moved. Move 5. Separate business and personal, no mixing. Open and use a dedicated corporate bank account for all business transactions. Benefits: clear books, tax compliance, legal protection, real professionalism. Consider an escrow account for specific deals or to hold funds before release per terms. Your operating cash stays clean. Your obligations stay organized. Mini exam, quick check. Name the 4 components of basic record keeping. List the steps to set up a general ledger. How does double entry keep the equation balanced? What's the purpose of a trial balance? Pro tip: choose a bank that fits your workflow. Fees integration support. Bring formation documents, EIN, licenses, operating agreement or bylaws, resolution of authority, IDs, proof of address, initial deposit, preparation speeds, approval, final takeaway. Tight records, a disciplined ledger, and strict separation of funds let you forecast clearly, pass audits, and make confident decisions. This video is the intellectual property of Jacqueline Enterprise Inc. For more details to help you scale your corporate growth, go to Amazon.com today and order several copies of Easy Corporate Comprehensive Curriculum for New Businesses.
Okay, so that's coming from chapter 3 in Easy Corporate Comprehensive Curriculum for New Business Owners. So I know that you have that book. That is this book, Easy Corporate Comprehensive Curriculum for New Business Owners. So, and that's in chapter 3. So you want to go to chapter 3 and review that. Let me get the book that we're going to be using today, and that's titled Abstracting Made Simple. Go to chapter 4 in your book. And what we want to do is we want to pick up on what we were talking about in our last recording, and that's making sure that we understand how to compile all of the necessary information to complete an accurate title report. It's vitally important that we do that. And so I want to make sure that you've got all of the components that's necessary to get that done. Okay, so in chapter 3, in chapter 4, if you can remember what we talked about prior to now was walking down the deed and the various language differences in the deed, understanding certain things in the deed that was going to be necessary. We talked about those things, such as the tenancy. We talked about that. We talked about how important it is to state the correct tenancy in the report. So I want to make sure that that you guys understand that, and that you've done that. So what I want to do is I want to send over to you some practice exercises so that you get an idea of you know, of how to go about making sure that you are understanding properly, because you know you can do things from the book, and until you actually start practically applying the information, you don't necessarily know that you've gotten it correct. So you know, teachers have practicums, and they do that to make sure that they understand all of the information that they are gleaning. So what I'm going to do with you guys now, we already have exams. If you notice at the end of a lot of the chapters in the book, you'll see a brief exam there. And the reason for that is it's like a way to accumulate the information so that when it's time for us to do the exam that's necessary for you to get your certification from our company, you'll be able to go through the full exam swiftly. At the end of every chapter, there are some chapter questions, but we're going to do some exercises. Rachel, I think I sent you one over, and Thea, you need to work through doing the title work on your own property. You had ordered a title research from us, a title report from our company, Public Research Inc., for your particular property that you have in terms of that tax certificate, and we got that completed for you. Now I want to show you how to walk through it and complete it yourself. Now that's going to be exciting because I'm going to walk you through you know, what you would have to do in the records room in order to get that done. But you're going to find that is very interesting. And Rachel, you already had an assignment. I believe we finished that particular assignment, and I need to send you some more. Okay. Yeah, we need to do some more. So let me swiftly run through this because we've got another video that we want to review, and actually I'm gonna do that, show that video after we've gone through a few things here. That's how we're gonna do that. We're gonna go through a few things here, and then we'll come back. We'll come back to that video. But right now, let's go over a few things in chapter 4. All right, so where did we leave off? We left off right at referring to the Tennessee. All right, so let's go there. Now, I think that's page 53. Let's confirm that. It's going to be page 51. Yeah, page 51. So you remember what we talked about before. And again, you're on page 51 entitled Abstracting Made Simple. Okay. So when we talk about the Tennessee, once again, it structures how the people are going to hold title to the property. The deed has to clearly indicate the type of tenancy. And the reason why that's important, because it shows or defines how the property rights are going to be distributed among multiple owners. So if there are multiple owners that are involved, this will indicate how that title rights will be distributed. Okay. So sometimes after one individual survives the other, there's language in the deed, in the tenancy specifically, that will indicate how ownership is to pass through. All right. So when we talk about joint tenancy, as we mentioned before in our last recording, ownership in joint tenancy is equally shared among two or more parties, and it has the right of survivorship. So that means if one of the owners passes away, then their interest automatically transfers to the surviving co-owner or owners. Okay. So I don't know if I need to repeat that. You know what? I wish, and I said this before in the last recording, I tell y'all, I prefer to have the class where we're together. So if you need to ask me a question, I know that there's there's a discrepancy in how you're understanding what it is that I'm explaining, and I can go further. But doing it this way, I don't know whether or not you actually have a clear understanding. So what happens is I repeat myself because I want to make sure that you understand what it is that I'm saying. But the language that I'm using is on page still on page 51 in the book, getting ready to head towards page 52. All right, so tenancy in common is when each owner holds an equal individual, divisible interest in the property. All right. Each owner owns an individual and divisible interest in the property. That means that it's not going to automatically transfer at death because they don't own their shares equally. Right. Yeah, they're not equally shared among the owners. Yeah, this is owned individually. It's not shared among the owners, and divisibly. Okay. So that means that instead of it passing on to the surviving owners, it passes on to the heirs or to the beneficiaries. Yeah. Yeah. And then a portion of it passes on to the state as well when it's this way, when it's tenants in common. So I'm not an attorney, and so I'm not able to offer legal advice. I can only say that whenever I purchase property and it's with more than other parties other than myself, additional parties, I prefer joint tenancy. That's a personal way of doing things. And now, if you purchase property with your corporation, it might be wise to hold title as tenancy in common. I prefer, again, joint tenancy, even in those cases. All right. All right. Tenancy by entirety. Now, remember, I said to you before, these tenancies all of them are not accepted in every state. This one is one of them. It's a specialized form of joint ownership. The issue is that it's normally reserved for married couples, and it offers a certain amount of protection against individual creditors, which is why it's not acceptable in every state. This is joint tenancy. Tenancy by entirety is not recognized in every state, and that's why. So when you understand the type of tenancy, then it becomes crucial to determine the rights of occupancy and transfer and legal implications that could follow in owners passing or the sale of their interests. And all of that becomes very intricately detailed when you are owning the property under tenancy by entirety. Okay, so we've already talked about, we looked at the write-up sheet and we see that it shows inscribed on the write-up sheet or the run sheet that you are to list the date that the document was signed. But you also need to type in the date recorded and identify it as the date recorded. So that clearly both dates are indicated for that deed. Seems like nothing to you, but it's everything to the company that's going to be insuring this title, and therefore is everything to the title examiner because they're preparing it and putting their license on the line to prepare it to get it ready for the company to insure. So it's very important that you support, because the reason why they need you is to provide the information so the title examiner can go in and disseminate how the title is to be advised in terms of the title commitment. Okay. All right. So I think we went over some of these things all before, and I don't want to repeat them. There are some things that I mentioned before, and that is that when you have multiple documents recorded at the very same date and time, you want to, and so especially when there's conflicts done, because I've seen people record the mortgage before they record the deed. So what you want to do is you want to list in your report the date that the document was signed, and then make a note of that they were recorded simultaneously, maybe out of order, but then you can list the date that the document was signed, which will still give priority in terms of the order of recordation. Okay. We talked about the consideration amount. It's going to be a nominal amount that's often listed on the deed. you know, and it documents the transfer. All right. Now, sometimes it's going to be a large amount. We stated that if that amount is less than $1,000, we don't normally list it in our report. It needs to be in excess of $1,000 before we list the consideration in the report. Because most of the clients that we're going to be referring you to for your vendor client relationships has those type of guidelines. Now, if they indicate something different, then of course you're going to go with whatever the instructions are that they apply to that order. And they're also going to have instructions in the vendor client relationship or the vendor agreement that they're going to send over to you. But for the most part, the clients that we're going to be referring you to would rather that we not list any consideration that's going to be less than $1,000. Okay. So when we're talking about a well-prepared title search, you need clear documentation. So everything that you're listing in your report, you need to have that document attached, and it needs to be in the order that is listed on the report. We mentioned that before. I just want to stop for a minute and encourage you guys. You are doing well. You're doing very well, actually. A lot of you were involved in things like field services and closings, and it kind of got you sidetracked, but you're still in a good position to get some good vendor client relationships with the companies that we've sent to you for abstracting, and get on the track of getting your consistent abstract orders. Yeah. So I want you to stay on track now. Maybe not so much with the closings or the field services, but the only way you're going to really get into this business and benefit from it is you've got to lock down on getting your vendor client applications in for abstracting. And if for some reason you're not getting callbacks, you're not getting the attention of whomever, I need you to send me an itemized email saying to me that you have applied for a vendor client relationship, abstracted vendor client relationship with the list of these companies, and they've not reached out to you, they've not responded to you. Send me the email that you email, the link that you use to sign up, all of that. Send that to me. If they haven't responded to you, send it to me. And along with the link. Now, don't just send me a list of names. Send me the link that you use to apply for that abstract or vendor relationship, or the link that you use to reach out to them to tell them that you're interested. Send me that information, okay? Or the email that you reached out to, or the contact person. I need a list of who all the companies that you've tried vendor abstract or vendor relationships with and have not gotten. Now, remember, I always say I don't get involved with the side stuff, the field services and the closings, because what I mean by I don't get involved, if that's something that you want to do, that's great. But what we guarantee is the abstracting relationships, and everything that you're doing outside of that distracts you from actually ever getting your abstracting business off the ground. So I want you to give me the list of the companies, the vendors that we've given to you. Clients that we've given to you to establish an abstracted vendor client relationship with, and they haven't responded to you. Don't just give me the list without the contact information. I need the contact information that you use to reach out to them, and to which they have not responded. Okay. All right, so I'm going to go past. We already talked about how to list the mortgage on the report. And if there's any tenancy that's listed on the mortgage, you have to also list that in your report. And you're putting the tenancy on the deed right next to the grantee information. And on the mortgage, you're putting it right next to the mortgagor information, because mortgagee is the mortgage company, mortgagor is the borrower. So right next to the mortgagor information on your run sheet, you're going to list any tenancy information that's on the mortgage. Okay. Yeah. Whatever tenancy information is on the mortgage, that's what you're going to list. Now, some title examiners will tell you that they want you to list whatever the tenancy is on the deed on the mortgage as well. But what you're supposed to do is look at that mortgage, and if there's a tenancy that's listed on that mortgage, put it on the mortgage right next to the mortgagor's name and information. All right, so I'm not going to go back over all of that because we've talked about it before. That principal loan amount that you see on that mortgage, The principal amount, that's the loan amount. That's what you want to list on your run sheet. Right next to your date recorded, you're going to type in loan amount and put that there. Remember, if it's an open end, if it says something like future advances, or it says home equity line of credit, you know that has future advances. So you're going to type open end at the top where we list the mortgage booking page reference or instrument number. Right next to that, you're going to list open end if it's an open end mortgage. If it's a planned unit development, you're going to put the acronym PUD, and that's going to be right next to the loan amount. So you got the date, the recorded date, and then the loan amount. And if it's a planned unit development, you're going to put PUD there. Okay. All right. All right. If there are any assignments that are listed, in an assignment is when the mortgage lender transfers ownership of the loan to another entity. Yeah, there'll be an assignment document sometimes that'll be recorded. Assignments are not always recorded, but in some cases there'll be an assignment that's recorded. And this ensures that the current lender is correctly identified, because somebody else may have made the loan and it may have transferred to several different mortgage companies. And at this point, it may be serviced by a totally different mortgage company. The assignment that's recorded will normally indicate that, but they're not always recorded. If you see one recorded, you want to list that information right underneath the subject mortgage, whatever that related mortgage is. If there's a modifications normally exist if there are slight changes that have been made to that original mortgage, whether it's the loan amount, the interest rate, the term of the loan. Those are things that are modifying the original terms of the loan. Those modifications need to be listed right underneath the related mortgage. And you need copies of these documents as well. And remember, I said, we're reporting mortgages that are open. Unless your client requests satisfied mortgages, we're reporting the mortgages that are open. Now, sometimes they have specific information. If that mortgage is paid in full and there's no open mortgage, then they may request a satisfied marketable mortgage, even if it's paid in full. Okay, I'm going to stop right here. We're going to stop at easements and restrictions because I want to go through explaining to you the necessity of easements and restrictions and the purpose that they serve. Right now, though, I'm going to show you the video. And when we pick back up in a later recording, we're going to start at the easements and restrictions, because I want to make sure that you understand the purpose in which they serve. And I know we've talked about this before, and this is not, of course, for you guys that already are pretty clear on this information, but there are those who are not as clear. They have not spent the amount of time that you've spent working on this, because they've been working on a different part of their venture and building their company in a different way. So they may not be as versed in this as you are. So I'm going over it to make sure that everybody understands it. Now take a look at this video.
4. Tenancy details, recording chronology, consideration, mortgages, and what every title examiner must capture. Your deed abstract sets the baseline for legal rights, survivorship, priority, and tax implications. First, specify the tenancy structure on the deed. This governs rights and survivorship. Joint tenancy, equal shares with right of survivorship. Interests pass automatically to surviving co-owners. Tenancy in common. Each owns a divisible interest that does not transfer automatically at death. Interests pass to heirs. Tenancy by the entirety, reserved for married couples with protections against individual creditors. Documenting tenancy clarifies occupancy, transfer mechanics, and post-death or sale outcomes. Date. Signed. When all parties executed the instrument. Date. Recorded. When the county enters it into the public record. Establishing priority. Ensure the signed date predates the recorded date. Unrecorded deeds can be hard to enforce against competing claims. Record the consideration amount, monetary or non-monetary. Nominal amounts often reflect family or trust transfers. Full market consideration indicates an arm's-length sale. Mortgages define the lender-borrower relationship, obligations, and special provisions. Document them thoroughly. Mortgagor is the borrower. Mortgagee is the lender. List all parties and correct legal names. Account for multiple borrowers, spouses, or entity owners to trace liability accurately. Capture tenancy type on the security instrument. It affects repayment, foreclosure, and succession. Document both the date signed and the date recorded to establish enforceability and priority. Record the principal loan amount, and note any modifications that alter terms or balance. Future advances clause keeps credit open. Track advances and understand title priority impacts. If in a PUD, note HOA-related obligations. Assessments, maintenance, and covenant compliance may apply. List assignments, modifications, and satisfactions to reflect the mortgage lifecycle. Omit satisfied mortgages unless the client requests the last marketable mortgage for reference. Easements grant access or use without ownership. Utilities, ingress, egress, conservation, and private agreements. Include recorded documents, locations, effective dates, and obligations like maintenance or access limits. If ordered, list restrictive covenants, architecture, land use, environmental protections, HOA rules, and attach copies. Abstract judgments with case details, amount, dates, status, and any resolutions. Liens follow the property. Tax liens take priority. List amounts, years, penalties, and any foreclosure proceedings. This video is the intellectual property of Public Research Inc. For more details to help you scale your corporate growth, go to Amazon.com today and order several copies of Title Abstracting Made Simple, a pathway to limited franchise success.
So basically, that was a summation of what we've already discussed. I wanted to give you that information in the form of a brief video. So if you didn't have enough time to watch the entire video, instructional video that I have created or that I provided, that I walked you through, that you would have time to briefly go through that 3-minute tutorial video that sums up everything that we just talked about. In terms of recording. Now, when we pick back up, we're going to be picking up at the place where we start to talk about easements and restrictions. Again, we've talked about all of this before. Some of you have tested on it, but we're going to keep talking about it, and you're going to start getting more assignments to actually go into the records room. Rachel, you and I walked through the research that we did in Hennepin County, Minnesota, because that's where one of the areas that you're going to be servicing. You'll be servicing more than one state. And I am just enthused about how well you're going to do. I have no doubt that you're going to do great in your endeavors. Matter of fact, I know all of you are doing great. Thea, I know that you're doing great. You've already got a jump start with your tax certificate, which is now actually a purchase certificate that you're going to redeem at the beginning of 2026, and you'll be able to obtain title to that property. And that's why you're also taking, in addition to the Easy Corporate Comprehensive Curriculum for New Business Owners, you're taking this course of Title Abstracting Made Simple, so that as you acquire title to these properties, you'll be able to do your own initial abstract so that you'll get an idea of what the title looks like, what's encumbering the property before you decide as to whether or not you want to go through with actually assuming ownership of the property. So I'm excited. I'm excited because, first of all, it took a lot for you guys to get this far. You have accomplished a lot in the fact that you have made it this far. Starting your own business and setting up a foundation that can help you maintain it. And when you're setting up the foundation, you're setting up the foundation so that when things begin to flow rapidly, Your foundation is already set. You don't wait until things start flowing. I hear people say, well, I ain't got nothing coming in, so I don't even have to do that. No, you do have to do that, because you're setting up a foundation so that you have an infrastructure to receive. Yeah, if you don't have an infrastructure to receive, when you start to get stuff, it's going to be chaos, and chaos is going to make your mind start blocking out. Your mind's going to want stuff to stop coming in. You're going to want orders to stop coming in because there's chaos and everything is everywhere. But if you have an organized infrastructure, when your orders begin to come in, when your bids begin to come in, when your projects begin to come in, you have a place to put them because your infrastructure is already set. There's no chaos there. It's just a matter of giving courtesy, turn time, and accuracy. Okay? I'm excited. I want you guys to stay the course, and I need you to send me a list of whatever clients you have applied for a vendor client relationship with and they have not responded to you. Don't just send me the list. Send me the link that you used to reach out to the client that we gave you to initiate an abstracted vendor client relationship. I want to remind you that you guys are doing great. You're not just doing great, but you're going to be great in your business. Okay? You've made the right decision. This is a great pathway for generating revenue and setting up a long-term corporation for you and to help many others.